Hey guys, what's going on? Coming at you with a Friday morning video. Today I just wanted to make a title basically saying markets have gone wild. I don't really want to talk about one particular stock because the market had a crazy day yesterday. Before I get into all this, I actually shot the video. My camera stopped recording, it broke, so you're gonna see all this stuff, but I'll break it down again. It just looks a little scribbly, but that's fine. I'll make it clear in the video. So yesterday the market had a crazy day. It opened a little bit red and then midday fell down and then rallied back at the end. So it snapped a 3-day losing, well, this would have been the 3rd day losing streak. So it snapped a 2-day losing streak. The Dow actually finished up 0.25%. S&P finished 0.42% up. The NASDAQ finished 0.06% up. So it did finish green yesterday for all three. The reason it was selling off the past couple days is the Fed is basically, even the dovish people in the Fed were saying that they were gonna raise rates more aggressively than what they, the doves in the market, in the Fed, were saying that they were gonna do a slow increase, and they're saying they might rate hike more aggressively to like 0.5 percentage basis points for the next couple of meetings, which is kind of, the market's pricing that in. Basically, the consensus right now is 80% of a 50% rate hike in the April meeting and I believe the May meeting. I'll go out on a limb right now and say it. I don't think they're going to do it. I think they're going to do a quarter point. Jerome Powell's going to stick the course, like he said. He said an 04 style rate hike, which if you look back at 04, they did quarter points until inflation was under control. I still think they're going to do that. So I think the market's going to get caught off guard, which is, it's going to be bullish when he says a quarter point. But even if it is a half point, the market's pricing that in right now. So sweet, rallied back. Most of that news is probably pressed in because it was selling off the past couple days solely because of this news, which is crazy to me. It's just funny how that works. So here are the 3 stocks I want to talk about. These are 3 big holdings of mine. They're all top 5 holdings of the 15 stocks I hold. I'm a long-term investor if you haven't watched my previous videos. So Affirm, the first one, AFRM, that's the ticker. It had a 5.3% pullback yesterday. This was a stock that really ran the past couple of weeks. It had, a 20-30% move from its bottoms in the mid-March. So this is, it kind of makes sense why this one's pulling back the heaviest, because you have a lot of swing and day traders that are probably taking profits as it starts moving down. People are like, okay, we hit the top, I'm going to take my profits and walk away from it. However, I am a long-term investor in Affirm. I really believe in their business model. I like their management team. I like that they've double-digit growth for years to come. And I also like that they also made a deal with Amazon this year. Obviously, Amazon's one of the biggest players in e-com. So they're partnering with the right people. So this stock closed yesterday at $38.85. I had an auto buy at $34. It went to 36 yesterday, so I didn't hit it. So I did not buy any Affirm yesterday. If it goes up from here, I'm totally fine with that. I like my cost base. My position's fully built out. So it's kind of a win-win for me. I would gladly take more shares at $34 and I'll buy more aggressively if it goes down. I don't know if it's going to reach there again. It all depends on what goes on. Obviously in the short term, nobody really knows, but I would gladly buy at that. Next stock is Honest Company. HNST is the ticker. It closed yesterday at $4.74. I had an auto buy at $4.50. I think yesterday it was at like $4.60 or $4.58. So it was within a couple of cents of hitting that auto buy, but it didn't. So I bought a couple days ago some Honest Company at $4.70, I believe it was. So it was about 10% of my portfolio of Honest. So not a super heavy buy, just kind of a chip. But yeah, I bought at $4.70. So I'm not looking to buy at $4.70 or $4.75. This position is also fully built out in my eyes. I don't like being more weighted than 20% in a position. So these guys are all double-digit percentage, anywhere from like 12 to 18%. So they're built out in my eyes. I mean, I don't want to really go super heavy, but if the deal gets really good, I will buy more. Last one is PayPal. I had an auto buy at 110. So how I approach this one is, it closed yesterday at 113.05. It did make it down to 110 and some change, just like Honest Company. It was like within a couple cents of hitting that auto buy. It never hit it yesterday. So right around like 1 p.m. Eastern time yesterday, that's when like they were all within a couple cents away, and then it just kind of swung back and rallied up. So is what it is. Again, they're all fully built out, not too worried about it. If you're looking to get into any of these stocks, obviously do your own research, but every single cost where they're at now, $38.85, $44.74, and $113.05 are all better cost bases than my current one as a whole. So all really good buys as a long-term investor. But again, they're almost fully built out. I'm not looking to try to go overweight on any of them because I feel like that's not, a good way to long-term invest. I mean, I know some people, they'll buy 1, 2, or 3 stocks and they'll go like 80% in one, but like, what if that stock does bad, or what if things U-turn on it? Like, I don't want that much volatility in my portfolio. I mean, these are all growth stocks and small. Well, this guy's a small cap, so I already have a lot of volatility. Some people would argue, so I don't want to like go even more by like put all my eggs in one basket. So it's kind of my approach. This is where I stand. I did not buy anything yesterday. Also, mortgage rates. A lot of people are freaking out about this, thinking that we're gonna, have a housing crisis, or the banks are doing very bad because they don't think anyone's going to want to buy things and lend because rates are getting so expensive. Mortgage rates in the matter of 6 weeks or even 8 weeks went from like 3.0 fixed 30s, 3.0 to like over 5 now. So I think they're just about a 5 or a little over 5 depending on your credit and all that stuff. So a 2% rate increase in a mortgage is hundreds and hundreds of dollars in an average median house. So it's definitely, most people that build houses, or these rates jump and they can't lock in their new rate before X amount of time before they settle. If you were at the max limit when you were expecting a 3%, now you have a 5%, it's going to cause a lot of issues. It's going to stop the demand a little bit. People might wait. If people wait, there'll be more supply. If there's more supply, price will correct down a little bit. I don't think we're going to have like an 08, 09 house or 07, 08 housing crisis or anything like that. The lending was completely different back then. That's not going to happen. But, there will be a little bit of a market pullback, and we'll see how far that pulls back. But I think people are just freaked out about that. They're freaked out about a possible recession coming because the 10 and 2 inverted, which actually re-inverted to not inverting anymore. And I think it spread more apart today. So that's good. It didn't remain inverted for a very long period of time, maybe like a half of a trading day. So those are kind of my thoughts just in the market, how the indices finished. These 3 stocks were the closest I had to buying yesterday, but none of them hit. So that's all I got. Till tomorrow, I might make a weekend video. I'll see. It might just be something, I don't know. I might do something a little different because the market's closed, obviously, but we'll see. So if you guys like this video, make sure you like, subscribe, comment below. Till next video, peace.